I mean, what better place to talk about the economy going to hell in the handbasket than by the pool? Hello, America. I'm down in Florida today, where I hosted a benefit for the Children's Miracle Network. I'm going to be here for a couple of days. More on that in just a bit. But the weather here is absolutely perfect, but there is a storm brewing up in Wall Street. The collapse of Bear Stearns' major investment bank highlights just how much trouble our economy is in. Very few on television can actually look you in the eye and say, "I told you so." And that's because they don't tell you very much. They are afraid to be honest with you. They are afraid to be wrong. Or quite honestly, they're afraid to look stupid. And I've made a cottage industry out of all those things, so what do I got to lose? Here's the point tonight. For over a year, I've been telling you, the economy is in big trouble, and unless all of the cards are played exactly right, we are bracing for the next Great Depression. Here's how I got there. When it comes to what I've been telling you about the economy over the last 12 months, I wish I were wrong, but I haven't been. 26% of all new home loans this year are interest-only loans. That means we're buying houses we can't afford. Who in their right mind thinks that's a good idea? This banking crisis is a lot worse than anybody is telling us because everybody has a vested interest in making sure that it doesn't go bad. If we keep spending as recklessly as our government does, this good economy not really going to be around much longer. That was 2 years ago. I mean, even I can't be wrong all of the time, right? By the way, the one guy who is starting to finally see the light on this is Alan Greenspan. He's the former Fed chairman who now says the current meltdown could be the worst this country has faced since World War II. However, our current Treasury Secretary, Henry Paulson, has a rosier view.
We have capital markets that are the envy of the world, that they're competitive, that they're efficient, that we move quickly when we need to address issues, and we have financial institutions that are strong financial institutions, recognized as such around the world, and will be strong institutions for a long time to come. And it's the job of regulators to come together during times of stress and address situations that help us protect our capital markets.
No, I think he's got that one. Oh, yeah. Look, we know the mortgage crisis is having a ripple effect across the financial spectrum. It now looks like the Federal Reserve Open Market Committee is set to cut interest rates again tomorrow. Does that mean we should all breathe a sigh of relief? No. Wall Street's going to go up, just like they did last week. It's not even close. A cut in interest rates essentially means that they literally print more money. That's a bad thing. According to the Wall Street Journal, the more dollars that they pump in, they can't fix what is fundamentally a problem of bank solvency. That's a quote. So tonight, here's what you need to know, America. There is one area of the financial market that is doing well. It's short sellers of the bank stocks. These guys are essentially betting that banks will continue to lose money, that they may make some cash in the short term. Well, that's great, but when average people like you see Wall Street losing confidence in our banks, they freak out, they withdraw their money, and that could cause even more banks to collapse. It is a vicious cycle where in the end, we all lose. Bob O'Brien is the editor of Barron's Online, and Peter Schiff is the author of Crash Proof, How to Profit from the Coming Economic Collapse. Bob, let me start with you. Forget about all this talk about Wall Street and everything else. The average person is having trouble with milk. They're having a problem buying gas. They're having a problem making their house payment. 70% of our engine, of our economy, is run on us spending money. How do we pull ourselves out of this hole if people don't have money to spend?
Well, Glenn, it's a very thorny question that we're trying to grapple with here. I mean, basically, everything that we're doing to try and bail out the financial services business is something, it's one of these, Main Street versus Wall Street initiatives. Everything you do to try and help Wall Street ends up rebounding and hurting Main Street. I think that's going to continue. I think the only message you can send to consumers out there is that they better be prepared for this to take a long time before it remedies itself.
What does that mean? What does that mean to you exactly? How does the average person, remember, average person that's struggling to make the payments and gas, what do they do to prepare?
Well, there's not much they can do at this juncture, I'm afraid. I mean, you're looking at record levels of things like oil, record levels for dairy products, even basic staples of life are all going to be more expensive going forward. And I think the only message that you're going to get from regulators and government officials is, folks, you're going to have to ride this one out. There's no simple fix here.
Yeah. Peter, you and I talked, we've talked about this for quite some time, and a lot of people have made fun of you for a long time being such a pessimist and calling this one damn near on the money, so to speak, up at this point. I said on the air, I don't know, 3-4 months ago, buy coats for your kids, buy shoes for your kids a couple of sizes up, because you're going to need them, and they're going to cost you more money down the road. And everybody was making fun of me. Sounds kind of like what Bob was just saying.
Of course, you know, there's a downside. All these bailouts cost money because the Fed pays for them with inflation. You know, it's crazy. You got Ben Bernanke or Paulson on television. Every time I turn on the TV, there's Paulson reassuring the American public that the underlying economy is sound. You know, it's like you go to your doctor and he tells you you're in excellent health, but I just want to perform open heart surgery just in case. You know, the Fed would not be doing this if the underlying economy were sound. It's because it's unsound that they're acting in desperation, but they're actually making the problems worse, not better.
So, Bob, you think that we would be facing, if it hadn't been for the Fed, what they've done already, we'd be facing something that was worse than the 1930s right now?
Regardless of whether the Fed has acted or not, I think we're in a circumstance that compares with the Great Depression, whether you're talking about weakness in the labor markets or the distress that we're seeing in the housing market. The comparisons with the 1930s depression is very easy to make. Okay. I think the only difference is on the margins, where you're seeing things like improved productivity resulting in a slightly better quality of living.
We're running out of bullets. The Fed is going to make another rate cut tomorrow. They did 2 massive things last week, and it doesn't really matter. They're just pumping more money into it. When do they run out of bullets?
The market seems to be suspecting that we're going to see a 100 basis point cut in the federal funds rate tomorrow. That'll take it down to 2%. I mean, you know, do you want to enter a circumstance like the one that took place in Japan for most of the 1990s, where effectively real interest rates were in the negative? I don't think the Fed wants to do that, so they're getting pretty close to having emptied the holster here.
But it's not a sense of those running out of bullets. They've been shooting blanks the whole time. Yeah. You know, the problem isn't that Americans aren't spending enough money. The problem is we spent too much money. These cures designed to try to get us to spend more. You know, Glenn, when you mentioned at the top of the hit that our economy is the engine is consumer spending, it's not. The engine of economic growth is consumers not spending. It's savings. That's what drives an economy. That's why our economy is phony. We're just like Bear Stearns. Bear Stearns went under because they had too much debt. Well, our entire country has too much debt, and we can't pay it back, just like Bear Stearns.
Peter, I'm going to bring this up with Mary Matlin here in a few minutes as we talk about John McCain, but where are the real conservatives? Where are the people that say all of this stuff that the Fed is doing is socialism? Well, we are socializing and nationalizing.
Exactly. There was one, you know, Ron Paul, but they drummed him out of the Republican Party. I mean, nobody would pay him any attention. He's the only guy that has the courage to speak the truth. Look at what he says on the Senate Banking Committee when he talks to Ben Bernanke and when he talked to Alan Greenspan all these years. He's talked about all this. He's warned about all this, but everybody has ignored him and others like him. I mean, I get marginalized in the mainstream financial world just like Ron Paul has been marginalized in the political world.
Right. And Bob, how fast do we see a sign of hope that something is working, or the other direction? How fast do we fall to the bottom?
Well, how quickly can we go further? Can we go lower here, whether in the equities markets or in the dollar? I mean, I don't think there's a floor in place. Traditionally, these kinds of cycles tend to be long-running cycles. I will hesitate, however, to say that when the financial sector starts to rebound, that typically puts in place a bottom to the market. So, if nothing bad happens,
when will we know that?
Well,
when the bad news stops, you're only going to know it in hindsight. When the bad news stops, if Lehman Brothers doesn't go out of business tomorrow, if another investment bank doesn't need to go hat in hand to the Fed, then perhaps we can start to build something of a base here. But this market has an enormous amount of risk.
Don't even look for the bottom. We're years and years away. There's a lot of pain to come. This thing is just starting. Our whole economy was a house of cards, and it is going to collapse.
Typically, the housing cycle is...
No, I got to leave it there. I'm an alcoholic. I'd put stuff in that here in a sec.